Why the productivity boom? Exactly how did China's economic reforms work to boost productivity, especially in an economy still burdened by extensive government controls? In the important rural sector, the story is particularly interesting. Prior to the 1978 reforms, nearly 4 in 5 Chinese worked in agriculture. By 1994, only 1 in 2 did. Reforms expanded property rights in the countryside and touched off a race to form small non-agricultural businesses in rural areas. Decollectivization and higher prices for agricultural products also led to more productive family farms and more efficient use of labor. Together, these forces induced many workers to move out of agriculture. The resulting rapid growth of village enterprises has drawn tens of millions of people from traditional agriculture into higher value-added manufacturing. Further, the post-1978 reforms granted greater autonomy to enterprise managers. They became more free to set their own production goals, sell some products in the private market at competitive prices, grant bonuses to good workers and fire bad ones, and retain some portion of the firm's earnings for future investment. The reforms also gave greater room for private ownership of production, and these privately held businesses created jobs, developed much-wanted consumer products, earned important hard currency through foreign trade, paid state taxes, and gave the national economy a flexibility and resiliency that it did not have before. By welcoming foreign investment, China's open-door policy has added power to the economic transformation. Cumulative foreign direct investment, negligible before 1978, reached nearly $100 billion in 1994. Annual inflows increased from less than 1% of total fixed investment in 1979 to 18% in 1994. This foreign money has built factories, created jobs, linked China to international markets, and led to important transfers of technology. These trends are especially apparent in the more than 12 open coastal areas where foreign investors enjoy tax advantages. In addition, economic liberalization has boosted exports, which rose 19% a year during 1981-94. Strong export growth, in turn, appears to have fueled productivity growth in domestic industries. In one final area, price reform, the Chinese have proceeded cautiously, granting a fair amount of autonomy to producers of consumer goods and agricultural products, but much less to other sectors. Several bouts of inflation have buffeted the Chinese economy in the past 2 decades, deterring the government from implementing full-scale price liberalization. High rates of growth also raise inflationary worries. Inflation may pose the single greatest threat to Chinese growth, though thus far it has been largely contained.